The Week in Review, April 24th, 2015. Brought to you by Precious Metals International. Volatility continued this week. Stock markets continued to push higher, even as more and more analysts on the airwaves openly discussed what appears to be a growing bubble in stocks. These same analysts have also begun pointing out just how similar current moves in stock markets are to those just before the tech bubble burst in the 1990s. The number of Americans filing initial claims for state unemployment assistance crept higher by another 1,000 claims last week, pushing the seasonally adjusted number to 295,000 for the week ending April 18th. The previous week's data remained unrevised, and the volatility in the data may finally be smoothing out as the weather improves. Durable goods in the US, excluding aircraft and vehicles, dropped in March, surprising economists that had expected an uptick in business spending and signs of a recovery to begin appearing after a weak first quarter. Much of the weak data for the first quarter has been blamed on crippling winter weather, but with the weather now abating, a poor start to the second quarter may mean that the widely expected economic rebound in the US will be slower than expected. In China, the economy continues to show signs of slowing and, according to PwC China Banking, the banking industry there may soon face a surge in failed loans. PwC's Jimmy Liang said in a press release on Thursday that there are a variety of indications that credit risk exposure is accelerating. Asset quality continues to worsen, while the average overdue loan period is constantly increasing. Over the weekend, the People's Bank of China cut the required reserve ratio, RRR, by 100 basis points in another attempt to stimulate lending to kickstart the economy. But if banks are already experiencing a spike in under- and non-performing loans, then they are unlikely to risk lending additional cash, even with the latest RRR cut. The Flash HSBC Purchasing Managers Index, PMI, for China, a private survey compiled by Market, showed a drop to one-year lows in April. China's PMI is estimated to have come in at 49.2, a further dip below March's final reading of 49.6. Any number below 50 indicates contraction. Market economist Annabelle Fiddes said, operating conditions in China's manufacturing sector deteriorated slightly for the second month running in April. Production increased only marginally, while total new business declined for the second successive month. China's property sector is also apparently facing another hurdle. As land prices have escalated in China, developers have turned to joint ventures for property developments. Reuters reported this week that under international accounting rules, unless a company holds a controlling interest in a joint venture, it can keep details of a joint venture and the debt it takes on off its balance sheet, recording instead just the amount of equity it has invested in the project. The practice is increasingly worrying investors as they begin to realize there may be additional credit risk exposure among these property developers. In Japan, Nikkei reported that Bank of Japan, BOJ, board members may be discussing whether to downgrade their inflation forecast for the next 3 years. If the BOJ is forced to admit that it cannot meet its stated timeline for meeting its 2% inflation target, the yen could be sent plunging to new lows against the US dollar. The central bank's biannual economic outlook review is due out on Thursday, April 30th, and any revision of the inflation target or the timeline for reaching it will likely be revealed in the report. In Europe, it appears Greece and its international lenders are no closer to a deal on its remaining bailout payment of €7.2 billion, despite discussions which took place in Latvia this week. After the talks, the president of the Eurogroup of Eurozone finance ministers, Jeroen de Dijsselbloem, told reporters, a comprehensive and detailed list of reforms is needed. A comprehensive deal is necessary before any disbursement can take place. We are all aware that time is running out. Greek Finance Minister Yanis Varoufakis said after the meeting that the cost of not having a solution would be huge for all of us, Greece and the Eurozone. Mr. Varoufakis said that Athens would be willing to make further compromises in order to reach a deal, but so far no such compromise has been forthcoming. CNBC reported that on Monday in Greece, the government passed an edict that requires public agencies to turn over idle reserves to the Greek central bank to help it plug fiscal gaps. Elsewhere in Europe, the flood of migrants fleeing conflict in Europe's neighbouring countries continues to escalate and is reaching crisis proportions. Over the weekend, close to 800 migrants drowned when the overloaded boat they were on capsized on its way to Europe. The Italian Coast Guard reported that there were only 28 survivors from the incident. The surge in human trafficking has led to a summit in Brussels to discuss ways to combat the growing problem which might include military measures. News agency AFP reported that it had seen a draft statement for the summit that commits leaders to undertake systematic efforts to identify, capture, and destroy vessels before they are used by traffickers. Crude oil prices continued to see support as the Saudi-led bombings continued in Yemen. Tensions also escalated as U.S. ships moved to intercept an Iranian convoy bound for Yemen, which was suspected of carrying weapons and supplies for the Houthi militia forces fighting there. Oil rigs in the U.S. declined for the 20th straight week, but despite that fact, inventories are still expected to rise in the coming weeks. The euro began the week dropping against the US dollar, but had found a bottom by Tuesday and began a recovery. The euro's recovery looked to be in jeopardy through early Thursday, but it began surging higher late Thursday and will close the week higher against the US dollar. The Japanese yen moved downward against the US dollar for most of the week, but also began recovering on Thursday and appears set to close the week near even or slightly lower against the US dollar. Volatility should be expected to continue. Stock market analysts and media personalities are all beginning to draw comparisons between the current stock market and that of the 1990s, just prior to the bursting of the tech bubble. The stock markets have continued moving higher, despite weak earnings and relatively poor macroeconomic data. Blanca Vera Azaf of El Nacional in Caracas reported this week that the Central Bank of Venezuela has pawned $1 billion worth of its international gold reserves. A Google translation of the article said that the so-called swap operation was signed with US-based bank Citibank. Venezuela's gold reserves will reportedly remain in vaults at the Bank of England as collateral against the loan. Reuters reported this week that Venezuela had also received a new $5 billion loan from China as part of an oil-for-loans deal. Under the arrangement, China provides needed funding for development projects in Venezuela and is repaid with shipments of oil and fuel. PDVSA, the state-owned oil company, told Reuters in March that Venezuela was in talks with China for financing two deals worth $5 billion each, one for economic development and one for oil investments. Venezuela's economy remains mired in an inflationary spiral, made worse by the recent plunge in oil prices. Mainstream media continues to talk prices for precious metals down in counterpoint to its long-running praise of the ongoing stock market bubble. As prices have continued to consolidate around current levels, Bloomberg reported this week that gold exports to China from Switzerland nearly doubled in March, climbing to 46.4 metric tons. The Swiss Federal Customs Administration also said that shipments to India more than doubled to 72.5 tons, and imports from the UK climbed by a factor of 6. Matthew Turner, an analyst at Macquarie Group Limited, told Bloomberg by phone from London, the big investor outflows from the UK via Switzerland to China and India is a continuation of the flow of metal from west to east. The data shows that Asia continues to amass precious metals at every chance, recognizing that price dips at these levels simply represent additional buying opportunities to acquire more. Russia also returned to the gold buying realm after a 2-month break. According to a separate report at Bloomberg, Russia increased its foreign reserves of bullion to roughly 1,238 metric tons as of April 1st, an increase of 30 tons and its largest purchase since September. David Jolly, an analyst at Mitsui & Co. Precious Metals Inc., told Bloomberg, "It's interesting that Russia is still buying because its economy has taken a knock from Western sanctions and from lower oil prices. This sends a very bullish signal to the gold market." In Europe, Greece continues to struggle to find cash to meet its financial obligations. Russia is rumored to be considering advancing up to €5 billion to Athens for a planned gas pipeline that would run through Greece to supply areas of Europe, but the Kremlin denied the rumors. Talks between Greece and its international lenders appear to remain at a stalemate over required reforms that would unlock an additional bailout payment for the debt-laden country. Eurogroup President Jeroen Dijsselbloem said on Friday that there was still wide difference to bridge on substantive reforms, and that there were big problems to be solved before additional funds could be released. Mr. Dijsselbloem continued, when asked about the talks, saying, "I can't tell you how discussions took place, but I'll be frank, it was a very critical discussion. We came to an agreement 2 months ago. Today we hope to hear positive results and an agreement to which we could make a decision, and we're still far from that. So it was a very critical discussion, and it showed a sense of urgency around the room." In the US, it appears that the economic rebound after a harsh winter that resulted in little to no economic growth for the first quarter may not happen as swiftly as economists initially thought. If April's economic numbers in the US come in weak, then the US Federal Reserve will be even less likely to begin hiking interest rates. Wise investors continue to accumulate physical precious metals as a part of a well-diversified portfolio, as price dips present them with buying opportunities to do so. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Week in Review, April 24, 2015, brought to you by Precious Metals International.